So investing in farmland entails buying land and businesses that produce crops, livestock, and other commercial products. Farmland investing has been a popular strategy for centuries, but lately the practice has commanded extra attention as billionaires like Bill Gates and Jeff Bezos, or Bezos, buy hundreds of thousands of acres. And speaking of Jeff Bezos, check out this video here where we see thousands of ex-employees getting canned from Amazon over the holidays.
Badges, they taking our vests and making us hand over our vests, bro. I ain't gonna lie, this is crazy, man. This is crazy, man. Like, we really just getting walked out right now, bro. Like, I didn't think that the 10,000 people be.
Man, that sucks. Can you imagine working somewhere that not only treats their employees this way after the founder announces he is giving away his multi-billion-dollar fortune over the course of his lifetime, but you have to actually wait in line to be fired or laid off? This is a crazy time, and our economy is seeing lots of evolution. But this should not only motivate you to budget wisely and save your money, but also look to invest and begin growing and expanding on your cash flow opportunities and building out passive income streams. And although the housing and real estate market is seeing its fair share of volatility with crashing home values and rising double-digit interest rates pushed by the Fed, making mortgage payments literally unaffordable for buyers and placing homeowners and sellers in a position of feeling like they are literally trapped. And so it appears as though the farming sector is still hot and yet another method for producing cash flow, impressive returns on investments, and possibly serve as an alternative way to hedge against inflation and an added form of diversification. You all know how strongly I feel about diversification of assets, income, and investments. So the U.S. Department of Agriculture, the USDA, has estimated that 30% of all farmland in the US is owned by landlords who don't farm themselves. One of the most straightforward ways to invest in farmland is to actually buy and own the land. But many investors don't take this route. There are numerous other ways to benefit from agriculture investment. Like, for example, you could purchase farmland real estate investment trusts, or REITs, farmland stocks, or farmland exchange traded funds, ETFs. And according to experts, farmland is an attractive investment because it can generate profit in a number of different ways. For starters, farmland is a limited resource. There's only so much land available, and an even smaller portion of area is fit for growing crops or nurturing livestock. Second, farmland actively yields crops that can be sold for a profit. And finally, just like any type of real estate investment, farmland can be leased to collect rental payments. Its value also tends to increase over time. In fact, farmland is often regarded as a sought-after investment during high inflationary environments, such like now. Farmland is less volatile than the stock market and tends to retain value well. Plus, food prices easily adjust for inflation, which gives farmland investors extra protection. And according to the USDA, farmland has generated a positive return every year since 1991, culminating in an average annual return of 11.5%. And as I mentioned earlier in the video, farmland investing can be a great way to diversify your portfolio and protect its value against inflation. But you don't need to buy a farm and start cultivating the land yourself to reap the rewards. There are many ways to invest in farmland without getting your hands dirty. Agricultural stocks are shares of publicly traded companies operating in the farming industry. They give investors exposure to these companies as well as their respective profits or losses. ETFs are index funds that track a variety of different stocks in the same sector. They're a great way to diversify if you don't know which company you want to invest in directly. Agricultural stocks and ETFs can represent companies that are actively growing crops, but some may be operating in other sectors that support farmers indirectly. Comment down below if you would like me to create a video where we can explore and take a look at some of the different types of agriculture stocks and farmland ETFs. If I get enough interest in that topic, I will be sure to make that video for you guys. And while you're at it, subscribe to the channel and give this video a like. I would appreciate it. So, investing in an agriculture stock means you're essentially investing in shares of a firm that actively plants, grows, and harvests crops for sale. Investors can also buy shares in a variety of industries that support farming. These include fertilizer and seeds, because some companies only engage in the production and sale of raw materials for farmers. There's also equipment, and farming equipment is an entire industry devoted to supporting farmers as they cultivate crops. And also distribution and processing. These can include different food distributors or processors that either sell directly to consumers or larger food companies. So there are also agricultural mutual funds which pool capital from shareholders to invest in a variety of securities, typically stocks and bonds. Like general mutual funds, these vehicles are operated by professional money managers who decide how to allocate the assets within the fund. In return for their services, mutual funds charge a fee that can eat into your investment returns. So, something to think about. Farm-focused real estate investment trusts, REIT, work like traditional REITs. These are companies that pool investor funds together to buy, manage, and sell real estate. When you invest in a farmland REIT, you're essentially buying a share in a company that owns farmland. REITs typically own a portfolio of multiple properties, which means you'll gain a more diversified approach to farmland investing. The company may take a variety of different approaches to generating a profit on the farmland, but the most common is to collect and distribute rental payments to you, the shareholder. Soft commodities are essentially agricultural commodities such as coffee, grain, corn, or wheat. These agricultural investments can be volatile and their prices may be subject to frequent changes. However, these swings can also make them incredibly profitable, so long as you're willing to put up with the risks. You can invest in soft commodities via stocks or ETFs for agricultural products. Crowdfunding is an investment practice that's gathered a ton of attention in recent years. It entails pooling small deposits from a wide range of investments to finance a big project. Many real estate crowdfunding platforms have popped up in the last few decades, including Farmland Enterprises. The downside with farmland crowdfunding is that it's not as tightly regulated as farmland stocks or farmland REITs. So it's important to do your research and find a campaign you really trust before committing funds. Farmland investing offers a variety of benefits. It can be a great way to diversify your portfolio, retain value over time, and protect against inflation. There are many different ways to invest in farmland without actually having to own a property outright. Many of them include farmland stocks, farmland ETFs, and farmland REITs, and they can be a great way to take on agricultural investments without having to make a large time or financial commitment. And so, AcreTrader launches an offering for a 241-acre farm in San Joaquin County, California. The 241-acre farm offering is a 6 to 12-month short-term investment opportunity through the repeat partner Delta Farm Management, LLC. The permanent row crops produced from the farm are alfalfa, wheat, and tomatoes. Water security is crucial to California's agriculture industry, yet Stockton Farm has the unique benefit of being located on Roberts Island in the Sacramento River Delta, where two of California's largest rivers converge. The dense farming region of California is responsible for 8% of total U.S. agricultural production and produces nearly a quarter of the country's food. And according to AcreTrader, this farm has riparian water rights off the San Joaquin River. There is presently no quantity limit associated with these riparian rights. A riparian right holder is allowed to divert that amount of water, which can be beneficially used on the property. So AcreTrader is an investing platform that makes it easy to buy shares of farmland and earn passive income through one of the fastest growing asset classes available. The platform features actual parcels of farmland where investors choose offerings to participate in based on their investing and investment preferences. The 241-acre farm in Joaquin County, California was purchased at an off-market cost of $4.3 million. The annual rental income will be $347,760 or $1,610 per acre, which will result in an implied gross yield of over 8%. AcreTrader just opened up the farm for investors, and the investment will have a 6-month distribution schedule with the first expected in June of 2023. Minimum investment $19,624, a target internal rate of return, an IRR of 7%, and target investment terms of 6 to 12 months. Since its inception, AcreTrader has been one of the premier farmland investing platforms in the market. After recognizing both the historically strong returns and low volatility of farmland combined with often high financial barriers, AcreTrader has made it possible for average investors to buy into this lucrative market. Investments in farmland often acts as a hedge against inflation too. Since 1990, the first year of the Farmland Investment Index, there's been a positive return every year, making this asset class increasingly attractive for investors looking to diversify their portfolios. And according to some savvy investors, AcreTrader's latest farmland disposition exceeds projected returns. And AcreTrader's latest completed investment demonstrates historical strength of an alt asset class amidst ongoing high inflation. AcreTrader, the land investment platform at the intersection of agriculture, tech, and finance, recently added another successful farm disposition with the sale of a Yazoo County, Mississippi farm. Lush farmland that was funded on the AcreTrader platform in February of 2021 and sold in November of 2022, the investment resulted in a preliminary IRR of approximately 11.4%, exceeding the initial projected return of 8.3%. This 976-acre irrigated farm grows corn and soybeans and benefits from strong groundwater and aquifer access within the Mississippi River Delta. AcreTrader received multiple unsolicited offers for the farm, accepting the latest and most competitive offer from a local individual buyer. This exit comes on the heels of 4 previously fully completed investments in the past year, with higher than expected returns attributing farmland appreciation as the largest driver. Together, AcreTrader's 5 total dispositions to date have returned a weighted average IRR of 14.1%. Looking at annual data collected by the USDA and Bureau of Labor Statistics, farmland's historical positive correlation with inflation levels is well documented for at least the past 4 decades. A 2020 study published by the TIAA Center for Farmland Research indicated that farmland had a generally positive spread on the Consumer Price Index, a common measure of inflation in the U.S. between 1970 and the year 2019. It's encouraging to see continued growth in land values drive farmland performance for investors, especially in our current inflationary environment. We're proud to offer investors exposure to an asset with appreciation and wealth preservation potential. And this is according to AcreTrader founder and CEO Carter Malloy.
A softer landing for investors as market sentiment moves to real estate and even investments in farmland. AcreTrade wants to provide a marketplace for analysis and insight on the land itself, helping buyers maximize their purchase decisions now through an online platform. AcreTrade's CEO, Carter Malloy, joins us now. Carter, great to have you here with us in studio.
Thanks.
So walk us through the model, the platform, and how quickly someone could go from evaluating the land to investing in it as well.
In a matter of minutes, to the second part there, so very quickly, our team is really there to help them with evaluations. So we're about 150 people in total. A good portion of that is software engineers and data scientists supporting a lot of the decisioning. But ultimately, how it works is very simple. We're a platform for investors to gain access to farmland. Farmland has performed incredibly well historically. We haven't heard much about it because, frankly, we had to go out and plop down $1 million and manage a farm. It's just not a thing most people could do. So that's where our platform, AcreTrader, comes in. We really help the individual come on, and rather than investing $1 million, you can put in $10,000 and own a slice of a farm.
Yeah, what is that? What would that $10,000? If I had $10,000 right now, what would that get me, and how do I analyze if that's a good investment?
Yeah, so it can get you anywhere from an acre to only a portion of an acre, depending on the where you are within the U.S. or Australia, where we primarily invest. Ultimately, the quality of that investment, each investment we put on the website has full detail describing here's why we believe this is an interesting investment, and here are the cons to each one of those as well with everything.
What are the best farms? What should I invest? How do I identify a good farm?
Yeah, most of the institutional portfolios seem to be about 60% row crops, so things like corn and soybeans, and then 40% permanent crops, things that grow on trees, almonds, fruits, et cetera.
What if I say I want to invest in wine land or kind of the vineyard country, if you will? Is that expansion into kind of new states, new countries even, where there are different types of either things being grown for regular produce or other types of products? How have you kind of managed some of the demand, or where are customers asking for that?
Yeah, we do get a lot of customers that equate what's on their kitchen table to quality.
Sure.
Right? Oh, if this makes wine, it must be a good investment. And then, of course, when they come learn a little more about that, it's like, actually, I think I want some of the boring corn. Maybe this wine's not for me.
Right, cows can't drink corn, or cows can't drink wine, rather.
Right.
So it's more about what the stock is that you can actually get into some of the other parts of the broader operation in a farmland as well.
That's correct. So the investor is buying a portion of this land, both. Returns are generated two ways for that investor. One is through the cash income, so you're getting a revenue share alongside the farmer, who's your partner in the deal, or a cash lease. But actually, more importantly, is you're getting exposure to potential appreciation of that land underneath you, right? So whereas the coupon may be something similar to a money market today, that money market does not protect you from inflation. In fact, it exposes you to inflation. Whereas with farmland, there's an intense correlation to inflation historically. And so you're actually you can achieve some protection from inflation by the underlying appreciation of that land.
That is interesting stuff. Well, I have to go now scrounge up maybe $10,000. All right, Carter Malloy, Acre Trader CEO. Good to see you again. Appreciate it.
Appreciate you guys.
So let's talk a little bit more about Acre Trader. Acre Trader says that they empower their customers to buy and sell land smarter through advanced technology, data, and expertise. Since its founding in 2018, Acre Trader has broadened access to buy, sell, and invest in land for thousands of investors, farmers, and landowners across the U.S. So we are all experiencing the economic effects that the year 2022 has brought so far, which has delivered a blunt reality check for investors who believe stocks go up forever. Please note that the benchmark S&P 500 index is down 21% year to date. Bonds, which were once meant to be the less risky asset class, aren't living up to their reputation either. As the Fed raises interest rates, the bond market has also entered a massive sell-off. Investors of both government bonds and corporate bonds have suffered big losses. And inflation is the Fed's key concern. Consumer prices are rising at their fastest pace in nearly 4 decades. And you don't need to look far to see how that impacts our lives every single day. Mid-grade gas now costs over $4 a gallon in most parts of the country. Housing prices have reached unaffordable levels in most metropolitan areas. And that same stockpile of groceries you bought last year probably cost 100% more today. Add in geopolitical uncertainty and you have the perfect storm of bearish factors. So it's no surprise that many investors have been looking for alternative assets to protect their portfolios. But not every safe haven is living up to that name recently. So now might be the time to explore a new and compelling place of refuge. Combine limited supply with rising demand, and it's easy to see why farmland could be a solid bet for the future. So there's no question why we see rich and wealthy multimillionaires and billionaire investors putting their hard-earned money into these investment vehicles. Why? Well, because, historically, land continues to appreciate over time, and it's the one thing they're not making any more of. Meanwhile, they are a great resource for a cash flow producing asset, especially when that land is farmland and it contributes heavily to the future of food, which we all know is going up in price every single day. Take Tai Lopez, for example. He's invested in farmland for decades, and he's been making YouTube videos and other social media content, sharing his experiences along the way, also monetizing the content in the process. If you guys are interested in learning more about monetizing your content, click the link in the description down below or check the pinned comment and come on over and join the network. Thank you all for watching and always hitting the like button on these videos. I will continue to expand on investing, investments, money-making opportunities, business building, wealth building, side hustle, and passive diversive income streams exclusively for members of the network. Click the link in the description or pinned comment to join us. You guys be safe, take care, and I will see you on the next one.